And I wanted to bring in Karl Schamotta, Chief Market Strategist at Corpay, who always helps us to make sense of all these issues, including the currency story. Karl, it's great to see you.
You as well.
I mean, I never know what to expect anymore. But what was your reaction to the inflation data?
Fantastic number. What we're really looking at here is a print that ratifies market expectations that the big sort of rise in inflation pressure earlier this year was a bit of an aberration, right? We're getting back on trend. Inflation pressures are subsiding. That clears the path for the Fed itself to begin cutting and for Chair Powell to sort of double down on that easing bias that you've seen in a lot of his recent statements, right? So that's all going to mean that we do get a more dovish than anticipated set of communications from the Fed this afternoon.
How comfortable are you sitting in these chairs when we start moving in one direction? Because I will literally go one day from hearing someone who's worried about reflation, that the Bank of Canada made the wrong move in cutting rates now, it's going to come back to bite them, to then having conversations with people who are very bearish, like David Rosenberg, who thinks the Bank of Canada is going to be cutting rates at every meeting for the rest of the year. How are we supposed to make sense of this as people watching and monitoring the markets?
Well, the wonderful thing about this is what makes a market.
Yeah, right.
Having this diversity of opinions.
That's right. Keep watching BNN.
I think the reality here is that anyone who's super confident about where this is going to take interest rates and the Canadian dollar is erroneous.
Okay, all right.
We should not be trusting in any solid forecast. The reality here is there are a lot of moving parts. The data that's coming in is conflicting. What this typically does represent when we start to see this sort of conflict in headline data versus underlying data is that we might be at sort of mid-cycle levels, like we might be sort of at a point where both the U.S. economy, the U.S. economy is clearly losing momentum. Canada has lost momentum, and that's going to make for very turbulent conditions. All that said, and I know that was a lot, the reality here is that the Canadian economy does look like it's coming off a bottom. And so the difficult part here is, although the Bank of Canada does need to move policy off the restrictive levels that it's currently at, the reality here is that we could see a bit of a melt-up, right? We know that because households, because businesses have seen these rate cuts coming for so long, that they're acting differently, right? We're seeing more buildings being constructed. We're seeing housing activity accelerating. We're seeing even retail spending climbing. The Bloomberg Nanos Consumer Confidence Survey released, I think, 2 days ago, showed Canadian consumers turning the most optimistic they've been in 2 years. So against that backdrop, you can't expect that the Bank of Canada is going to move in a linear manner. It's not going to continue to cut aggressively. It's going to wait and see, and it's going to try to assess how economic conditions are evolving over time.
And they've said as much, in fairness to them, yes, even though they take a lot of heat. The loonie story then, again, for anybody who's traveling this summer or just trying to figure things out, because actually this matters a lot to stock market performance as well, depending on where you're buying equities, what currency you're buying in them, all that kind of stuff. I've heard plenty of people who would not be surprised to see the trend taking us towards 70 cents US.
Right.
And yet one could argue that even though we have weakened, it's very clear over the last year that it's been holding up relatively well around 73 cents. Anyway, I'm just the host. What are you seeing in the charts right now?
That's I think exactly what I would say. The reality here is that markets have pushed the loonie down in anticipation of a divergence between the Bank of Canada and the Federal Reserve. However, the loonie has outperformed its global counterparts. It's done well against the euro, the pound, et cetera. And so the complex thing is understanding what is priced in right now, which is the Bank of Canada cutting aggressively relative to the Fed, and worrying about what might not be priced in, right? And so if we do see a warm up in the Canadian economy, the Canadian dollar could actually rally. I'm not going to say it's going to go, to the moon here. We're not going to move like a meme stock or something, but the Canadian dollar very much could move up simply because what is priced in right now is very, very pessimistic relative to what we're actually seeing in the data. Okay.